Welcome back. You're watching Market Fatafat right here on ET Now, a show where we get you all the stocks buzzing based on news flow as well as technicals. And talking about technicals, now we have Dhwani Patel joining us on the show. Very good afternoon to you, Dhwani. And the first stock that you're going to talk about is a mid-cap IT company, and that is Bsoft. How is this one looking on the charts to you now?
Good afternoon. And when we're talking about Bsoft, what is interesting over here is the daily chart of this particular stock. The stock is already trading in an upward trajectory. So we've seen some profit booking coming in today, but it's good to go to invest into this one from current levels. One can go long into this one from current level, and a short-term target over here extends up to 535. Stop loss that one needs to maintain over here is on the lower side of 500.
Okay, keep an eye out on those levels for Bsoft. Let's move on and then talk about Tata Motors. And Lisa, why is Tata Motors in focus today?
So Tata Motors is in focus as JLR has come out with their Q2 update, and as per the update, the volumes that they have reported for Q2, that looks quite strong and healthy. The wholesale volumes, that's up around 29% on year-on-year basis. Even the retail sales volume, that was up around 21% on year-on-year basis. It was highlighted that retail volume growth that was strong across all the regions. The overseas in overseas market, that was up 56%, North America 32% on year-on-year. Europe saw a growth of around 16%, and even China, it saw a single-digit growth of around 7%. And on their order book, that also remains strong at around 168,000 units at the end of the quarter. And the models like Range Rover, Range Rover Sport, Defender models, which occupies around 77% of their order. The management said that the demand for these models also remains strong, and on their free cash flow, JLR expects positive free cash flow of around 300 million euros in the September quarter of this fiscal. So yes, on the back of healthy volumes as well as strong order book, Tata Motors in focus today.
All right, that's Tata Motors for you. Ansh, coming to you, KPI Green Energy. Why is this particular company in the spotlight today?
Sure. So KPI Green Energy is up by around 2%. They have got an order for solar power project under captive power producer segment of the company for total capacity of 12.1 megawatt, out of which 3.1 megawatt is allocated to the company itself, whereas the remaining 9 megawatt is allocated to its wholly owned subsidiary Sundrops Energia. Also, the stock has been forming higher highs and higher lows for fourth consecutive session now. In addition to that, if you see on a monthly basis, stock is up by around 10%.
Okay, let's move on to the next stock. And MCX, Dhwani, this one is buzzing in trade today as well. What is the new technical level that one should watch out for MCX? Last couple of months, this one has picked up pace in terms of a momentum. Do you think that's here to stay?
Yes, absolutely. The momentum in this one continues. In fact, in the last 5 sessions, what we are seeing over here in this stock is that the volumes are also picking up with the up move that we are witnessing over here. From current levels, one can go long into it. A short-term target over here comes up at 2150, post which we will see a rally to 2200 as well. Stop loss one needs to maintain over here is of 1925.
All right, so that is MCX for you. A lot of news flow surrounding that particular counter as well, actually, Vinny.
Absolutely. But let's move on, talk about Concord Biotech. And why is this one in focus? Because there's a note that is coming from Jefferies. They're initiating a buy on this one, given a target price of 1,260 rupees per share. Concord's is targeting the fermentation-based products, which will have higher entry barriers, but wide portfolio and adequate capacities is something that will help them grow over the next 5 to 7 years. Now, Jefferies is estimating a revenue as well as a PAT CAGR of 20% and 30% respectively over the next 3 years, and they believe Concord actually deserves a premium to its peers as well due to the superior growth profile that they have, strong execution track record that they have, industry-leading margins, as well as their return ratios. That will be something that will supporting Concord, and on the back of that, we're seeing that the stock is buzzing in trade, holding on to gains of 4% as of now.
All right, so that is Concord Biotech. That is in focus on back of initiation report that is coming in from bourses, from brokerages. But let's move on and let's talk about Mankind Pharma, because that particular counter is in focus in today's trading session. It was actually trading lower last time I checked, but right now the stock has actually recovered from the day's lowest point. The company actually said that there was disruption of operations at their manufacturing facility in Sikkim due to flash floods, and they said that the operations at the manufacturing unit in Daring Block and in other regions of Sikkim have been disrupted due to the disturbance in the power of the utility supplies due to the flash floods. However, they said that no major disruption was expected in supply chain as the manufacture of the products was anyways diverted to other plants. So that's the clarification coming in from the management. Yes, the operations have been disrupted, but no doubt from there on they've actually shifted the supply of the products to another plant. So on back of that, you have Mankind Pharma that is in focus.
Let's also listen to what Pankaj Tibrewal had to say in terms of the pharma space. What is his view coming in on the sector?
I think pharma sector incrementally, I've been saying for the last 6 months, we continue to be positive. First quarter, we saw that after a long time, the entire pharma cohort reported 22 to 24% earnings growth. I believe the trend should continue in this quarter also, led by decent US traction. Our channel check suggests that US price erosion has been much lower than what we have seen in the last 4-5 years. And many Indian players incrementally should benefit, at least in the near term, from the from the lower price erosion which we have talked about. So I think pharma incrementally is also looking quite okay.
Okay, let's move on to stock number 25 for today. And Dhwani, you've picked out M&M for us on the auto sector. What are the charts now indicating for M&M? Last 6 months, 32% return. What is your view on M&M now?
Absolutely. The stock, after giving a return, was trading in sideways. It was constantly making a support level at 1500 levels, from where we are seeing a bounce in this particular counter. What's interesting is that in the last 2 sessions, we have seen the stock moving here about 50-period exponential moving average. From current level, one can go long into it. Stop loss for this particular counter comes at 15.15, and the target for this one on the short-term basis extends up to 16.40.
All right, moving on, Lisa, let's talk about Som Distilleries and why is this in the spotlight today?
It's in spotlight and it's even trading lower today, and that is because the company has updated on the QIP. Remember that in September the company had announced that they'll be raising funds through a QIP launch to the tune of around 350 crore rupees. Well, the company has now updated that the floor price for the QIP that will be around 349 per share, which was around 9% discount to the closing levels, yesterday's closing levels. So yes, the company said that they will also be meeting on October 10 to discuss the issue price and for the QIP and also discounts if any. So that is why we can see this, the stock is trending lower today. It's around 2.5% as we speak, but 1 year basis, the stock has given whopping returns of around 200%. So that's Som Distilleries trending lower in today's session.
Let's move on and talk about L&T Finance and Dhwani, and why is this one making to your list? Is it one of those attractive NBFCs and financial space that you think, and would that be a top pick?
Absolutely. What we are seeing is that space has already been buzzing, and in this particular counter, if I see over here on a daily chart, we are seeing the stock trying to move above its previous swing highs, and the highs in today's session we have seen that with volume the high has been taken out. From current level, one can go long into it. A target of 145 can be expected easily on this counter. Stop loss that one needs to maintain over here is of 132.
Alright, so that's the take coming in L&T Finance. But on that note, we slip into a break in this edition of Market Fatafat. More stocks to discuss on the other side. Don't go anywhere. Welcome back. You're watching Market Fatafat right here on ET now. And Ansh, coming to you, let's talk about Ujjivan Small Finance Bank. This one is soaring away in today's trading session, and why is that?
Sure. So Ujjivan Small Finance Bank will be in focus on the back of the quarter 2 operational updates. The stock is up by around 6%. Total deposits has surged to 29,134 crore, marking a substantial 43% increase on year-on-year basis and 9% on quarter-on-quarter basis. Bank continues to manage excess liquidity towards a comfortable level. While CASA shows strong growth, which is up by 27% on year-on-year basis and 7% on quarter-on-quarter basis to over 7,000 crore. We are seeing an increase in gross loan book as well by 27% to 26,600 crore. Also, the stock has touched a 3-year high level on intraday basis as seen on charts.
Okay, that is Ujjivan Small Finance Bank. Let's move on and also talk about Granules on the technical front then. And Dhwani, when you look at it, seems like it's picking up momentum now, Granules. What is the outlook you have on Granules? What is the target price that one should watch out for?
Yes, absolutely. The stock is picking up its pace back again. What we are seeing over here on a daily charted, it's trying to make a rounding formation over here, and we are again on the higher side of the same. From current levels, one can go long into this particular counter. The target for this one extends to 380, post which we will also see a breakout of this stock. Stop loss that one needs to maintain over here is of 350.
Okay, let's move on and talk about all these metal names, and they are in focus today, whether a JSPL, JSW Steel, Tata Steel, Hindalco and Coal India, because there's a note that has come in from Macquarie. Now for JSPL, Macquarie has upgraded the stock to an outperform from a previous neutral rating. They have hiked the target price 808 rupees per share. For Tata Steel, they're maintaining the outperform rating but hike the target price to 151. And similarly for Hindalco as well as Coal India, they're maintaining the outperform rating and hike the target price for both these companies as well. JSW Steel, on the other hand, they have downgraded the stock to a neutral from a previous outperform rating and cut the target price, hike the target price on the other hand actually to 841. Now what they believe is that the steel companies will benefit from the strong domestic demand that is there and the strength in domestic steel prices. And other than that, in terms of the outperform rating on Hindalco, they believe that this is given the global downstream and domestic upstream business which is there. That is something that is making them keep the outperform rating on Hindalco as well as healthy dividend yields and steady earnings to support Coal India in terms of the stock move. And that is why all these stocks are on their radar. They've hiked the target price for all these stocks.
Alright, moving on, Dhwani, let's talk about Paytm. And today this one is definitely having a quite reasonably a good day. But Paytm, off late with the rest of the new age tech stock, also has seen a very good comeback, 43% in the last 6 months. Do you think that this comeback will be sustained?
Yes, absolutely. In Paytm, what we are seeing over here is a triangular breakout on a short-term chart over here. And this move has to sustain on the higher side. The base of the triangle is forming here is of almost 100 points. So from current levels, we can expect a 100-point rally from the same. One can go long into it for a target of 1000 and keep a stop loss on the conservative side at 900.
Alright, moving on then, let's shift focus, let's talk about Wonderla, because yes, that particular counter has been in focus of a lot of technical analysts, but now you have a brokerage note also that's come in on this particular counter where Ambit has initiated coverage with a buy rating with the target set at 1,250 rupees per share. They say Wonderla's growth and profitability will be driven by the ARPU-led growth at existing parks and successful opening and ramping up of footfalls at the upcoming parks. One is in Odisha and the other one is in Chennai. They are saying they expect a revenue of about 19% CAGR over FY23-26, 19% EBITDA growth also at CAGR growth at about FY23-26, as well as EBITDA also they are seeing, or rather EPS also they are seeing a sharp run up going ahead. They are also saying the footfall CAGR will be led by footfall bump up in FY26 and opening of their 2 new plants as well. So on back of that, they have set a target price of around 1,250, which implies a 17 times 1 year forward EV to EBITDA. This is their 2-year SOTP based target price. So on back of that, you have Wonderla that's in focus. No doubt, it's given up some of its gains, but definitely the stock has been a buzz off late.
Let's move on and talk about Poonawalla Fin Dhwani, and on the charts, what is the pattern you're picking up here and what is the target price that we should watch out for?
Poonawalla Fin has already been trading in an uptrend for us. What is interesting over here today is that the stock has given a breakout above its 50-period exponential moving average, as well as what we are seeing on daily chart is a crossover positive side of the RSI. From current levels, one can add it into the portfolio. It would be a long holding for about 3 to 6 months. Stop loss that one needs to maintain over here is of 365, and the target that can be played out over here is of 445.
Alright, moving on, let's talk about Jubilant Food then, Dhwani. How is this one looking on the charts to you? Yes, everyone's expecting that this particular 1 to 2 months will be pretty exciting for the company, but on the charts, is that excitement seen?
Yes, absolutely. The excitement continues on the chart also over here. And with the festive season and the cricket fever already going on, a lot of pizzas being ordered over here. From one can go long into this one from this particular level, and with a stop loss over here that has to be maintained. would be on 520 over here, and on the target that one needs to look out for here is a 580.
Okay, let's move on and to the next stock we have RailTel. Lisa, why is this one in focus?
Well, yes, it's on the back of order win. RailTel has received an order of around 68 crore, and that is from Jammu Smart City. And the time period for the completion of this order is around 9 months. The nature of the order is design, supply, installation and maintenance of data center as well as disaster recovery center for the integrated command as well as control center for Jammu City Limited. So yes, that is why we can see RailTel Corporation. It is up and about around 2.8%, showing strength in the market today. And also the many moving parts for RailTel also going forward, as it is also eyeing the coverage projects of around 4,000 to 5,000 crores. So yes, RailTel is in focus on the back of an order win from Jammu Smart City.
Alright, so that is RailTel, that is in focus, and that indeed is the last stock of this edition of Market Fatafat. Thank you so much for watching. It's a good buy for Minnie, myself and the team to show together. Stay tuned. Closing trades coming up next.